Hello everyone, Commerce with Mac here today to teach you October-November 2018 7110 paper. This was a request from a student in the comment section, so I wanted to do because these comments are my audience. So whenever you request something, I will always upload uh, as much as possible from my side. Before we move on to this paper, I wanted to remind you one particular thing. Subscribe to the channel if you haven't subscribed. Commerce with Mac. Commerce with Mac YouTube channel is a YouTube channel which educates students in economics, accounting, and business studies in Cambridge O level, Edexcel, as well as IGCSE, AS, and A level. Paper now. So we are going to do the 30 questions now. So if you don't understand, if I go a bit speed, you can make the speed in a slower version in YouTube. You have that access in the YouTube. So if I'm very speed in the explanation, play it slower, so you will understand it much better. Making practice in past papers is very important when you are doing your exam, so you need to practice as much as possible. So I have uploaded a lot of past papers in the YouTube channel. So in Commerce with Mac, if you go to my playlist, Cambridge O levels playlist, you can find out all the past papers you wanted and get ready for your accounting, economics, and business studies exam. So let's start the first one. Which statement about bookkeeping and accounting are correct? So this is my annotation bar which I use, always use it to point out where I'm reading, so it will be easy for you to know which part I'm reading, so you can focus on the areas on which I am speaking. So let's start. Which statement about bookkeeping and accounting are correct? Accounting is performed periodically rather than daily. Accounting relies on having accurate bookkeeping records. Bookkeeping includes the preparation of financial statements. Bookkeeping involves the recording of financial transactions. So now they're asking the difference between a bookkeeper and an accountant. What is the main duty? Normally, you need to understand one particular thing. This is one of the basic question in every years of past papers you can see. Bookkeeper and the accountant has a very big difference. Bookkeeper is a person who records the day-to-day transaction in the books of accounts, whereas an accountant is a person who takes the entire bookkeeping transactions and he summarizes and he will record it in the financial statement. So accountant work is to prepare financial statement, to know what entries went wrong and why it is wrong, to find out ways to keep the accounting records in a perfect manner. But a bookkeeper doesn't do that. A bookkeeper just records the transaction day to day, and with that the work comes to an end. So here, what does accountant and a bookkeeper's meaning is carried on? So let's see. Accounting is performed periodically rather than daily. Of course, it is not done daily because bookkeeper is doing the work daily. So why does an accountant needs to do? He will take the every work within a month or maybe every term, interim term, like 3 months once, and then he will finalize the books of accounts. Accounting relies on having accurate bookkeeping records. Of course, why do we need to have accounting? We need to know that the accounting records are correct, it is accurate, then only people will be able to understand it and invest more on the business. Bookkeeping includes the preparation of financial statement. A bookkeeper never prepares financial statement. His focus only recording the transactions. And then fourth one, bookkeeping involves the recording of financial transaction. As we already said, the bookkeeper is always recording the day-to-day transactions. The answer 4 is correct, answer 1 is correct, answer 2 is correct. So the answer for the first one is A, 1, 2, and 4, because this is correct, this is correct, and this is correct, and this is wrong. So we'll move on to the next part of the question number 2. So I'm going to erase this off. Yeah. Ava had $4,000 in the bank. She paid the supplier $575 by check in full settlement of $600 owing. Which changes would take place within the accounting equation? Very simple question. This is a formula of A equals C plus L. So C is capital, L plus L is liability. So when you take this formula, they're saying that she paid the supplier. So Ava has a balance of 4,000. That doesn't matter for us. She's paying 575 by check in full settlement of 600 owing. So when you pay 575, actually your asset will decrease by the amount what you are paying. Because when you pay 575, you can't decrease 600 from the books of account. So you need to decrease 500 only. So which 575 only. So which is decreasing 575 in the assets? Answer C. You saw one way of understanding the question. You got the answer itself. Reason. Now I'll explain you the plus 25 and the minus 600. When you make the payment for a credit supplier for the money you are owning, and that is $600, you are going to deduct 600 because you have paid. So this is going to be correct. And then when you pay 575 out of 600, you are saving $25. So that $25 should be an addition because it's a discount received. It will become a plus mark. So now the first way I found this answer, I didn't go that deeper. I only understood the basic concept. If I pay 575 from my books of accounts, my asset will decrease by 575. And if my asset is decreasing, in which terms? In bank, my amount will decrease by 575. So when I found that, my answer is already there, and I explained you how minus 600 and plus 25 works on. If you don't get this, if my explanation is very faster, go slower, play it slow, so you will get it in a more accurate manner. Then let's move on to the third sum of this question. So I'm going to erase this off. Winston returned goods to Hanif. Which entries will Winston make his ledgers? What I see from most of the students, they don't understand the question properly. That's the reason they always mock up on the exams. You need to remember one particular thing when you have a question like this. Always understand who is returning to whom and who is. And when you speak Winston, Winston is what and Hanif is what? Is he a credit customer or is he a credit supplier? So understanding is a credit supplier, credit customer is very important when you are doing a sum like this. So now let's move on to the point. Which entries will Winston make? Now let me explain you. Now who is Winston? That's what we need to understand. Winston returned goods to Hanif. So Winston is a credit customer. Hanif is a supplier. This is what we found out here. So he's a customer. First of all, understand who are they. Okay. Then we'll say supplier. So we found that customer and supplier is already there. Now we need to know debit entry and credit entry they are given, and we need to know now if Winston is returning. If I am a person, now imagine now Winston's books of account means you should think you as the Winston. So I am Winston now. If I am Winston, I'm going to return my products. If I return my products, it is going to be returned outward. So if it is returned outward, okay, what account it will, how we will record? Is it debit or credit? Remember one particular thing. When I return the goods from the business, for me it's a profit because the money which I need to pay, I don't want to pay now. And when I return as Winston, we are returning the goods to the credit supplier. So purchase returns will become on the credit side. Now the confusing part of this question is here. There are two purchase returns on the credit side. You see that. So they are trying to confuse you. Don't get confused, guys. Okay, one particular thing. If purchase return is on the credit side, okay, it's fine. Now they have given another answer. Now this answer looks similar. Hanif account is debit, purchase return account is credit. So either A or C is the answer. Now after finding out the options, we need to know, okay, Hanif is the credit supplier. So whenever I return the good, purchase return account will become credit, Hanif account will become debit. If you're not good in the double entries, guys, if you don't understand what I'm trying to say, then of course you need to watch my double entry video. I have uploaded that also on the link description. So when you watch that, you will understand how double entry actually works. Now here in purchase returns, if you return the product, it becomes a profit for you. So that's the reason we are recording it on the credit side, and on the credit supplier, it's a debit because credit supplier account is a credit account. So when you return the goods, it should be on the debit side. But then there's two things. Is it a general account or a purchase account? Remember one thing, a credit supplier falls under a purchase account. You would have learned this type of ledgers. There are three types of ledgers: sales ledger, nominal ledger, and purchase ledger. Purchase ledger is recording the credit suppliers. I'll write here a small note so you can also write it. So next time you will not forget it. So purchase ledger will record credit suppliers accounts. Okay. Then sales ledger will record credit customers or debtors, and then nominal ledger, or we also say it as general ledger. Sorry, general ledger. So this will include the entire stuff which all other account except the purchase ledger and sales ledger comes under this. Now there's a confusion between the students. Sir, is sales account and purchase account both are same? I say for them one particular thing. Sales account is a sale account. Don't confuse with the sales ledger account. Sales ledger account is speaking about the credit customers, not the sale account. Sales account is an income account. So sales account is a nominal ledger. You need to understand that particularly. Purchase account is a nominal ledger account or general ledger account. Then what account is purchase ledger it takes? Purchase ledger takes credit suppliers or trade payables account. So you can't take purchases account and put it under purchase ledger. It's wrong. You will have matching questions also in future. So you should be very careful when you understand this type of thing. I think this is explained so many times in the past papers which we have done. So you can revise it again and again whenever you want it. Let's move on to the next part. So the answer is C because Hanif is a credit supplier. He falls in the under purchases account, and purchase return is falling under nominal ledger. So we consider it as a general account. So with that ideology and knowledge, we are moving on to the fourth part of the question. I'll go a bit down. Okay, another question. Andy purchases goods from Charles. The account of Charles in Andy's books for the month of September showed the following entries. So they are given purchases 625 credit, returns 27, purchase 317, 30, 598, and final balance is 317. Now, again, as I said, you need to be very concerned who is returning to whom. Andy is purchasing goods from Charles. The account of Charles in Andy's books for the month of September. So this is Andy's books. Okay. So under Andy, now they're asking, see how they're confusing. They are saying that Andy is purchasing from Charles. You got that, right? Then they are saying that this statement they are given is in Andy's book, but they are not asking Andy's side, they are asking the Charles side. Here you see which document would be issued by Charles on 8th September. Very confusing, right? So you should be very careful when you're doing this. Now, what you need to understand, it's not from the Andy side, it's about Charles side. So now Andy is a person who is purchasing goods from Charles, means in Charles books, okay, Andy is in Charles books, Andy is going to be a customer, credit customer. Or we say him as trade receivable. Receivable. Okay, so in Charles' book, Andy is a credit customer because Andy is purchasing goods from Charles. But they're asking what did Charles issue to his credit customer. So for me, now imagine you as Charles. If you are Charles, on 8th, what is the document you would have issued? Is what they're asking. Is it a debit note? Is it a credit note? Is it a check? Is it an invoice? Now remember one particular thing. You are a supplier. You are issuing to your credit customer. If your credit customer is issuing to the supplier, if your credit customer is issuing to the supplier, which is us, it is debit note. Remember one particular thing. If you, which is Charles, as credit supplier, is issuing a document to your credit customer, so from credit supplier to credit customer, we say it as credit note. The reason, guys, when a credit customer issue a invoice to the credit supplier, he is requesting, my account is overcharged, so can you reduce this balance? So whenever he's confirming that, we always issue a debit note. But on the credit supplier side, if you issue a statement to the credit customer, then of course it becomes a credit note always. So answer for this is going to be D. Okay. Then you can also ask, why can't we issue check or invoice? The reason I didn't go with that, check, when you invoice, it should be it should be debited 598, and they didn't do. And this is from Charles side. Of course, you can't give a check because this is speaking about the 8 days. So that's the reason I didn't go with these dates. You can just see here, guys, when you are understanding one particular thing, always go on to the question. They're saying 8th September, so no point of going on first, 17th, and 30th and wasting your time. So sometimes the grid boxes they are giving is to confuse you. Don't get confused when you're doing the sums. Please be focused. Then we'll move on to the 5th question of the sum. The following amounts were recorded in the bank column of Tamir's cash book in September 2000. In September, not 2000 year. Received from customers given 4022, payments 4819, checks bank later dishonored 256. On 30th September, the balance in the bank column of Tamir's cash book was $2,265 overdrawn. What was the credit balance on the bank column of the cash book on 1st September 2000? So I just need this to do in a Excel. I'm gonna do the question number 5 in Excel now. I'll zoom a bit. Now you can see this. I'm gonna draw an account to make you understand in a much better way. So whenever you feel you have a chance to draw a ledger account, guys, draw a ledger account, then do the sum. Then you will be focused on. This is bank account which I'm gonna do. So I'll write bank account here. Now let me move on to the question again. The following amounts were recorded in Tamir and book columns of Tamir's cash book in September. Received from customer is 4022. So when you receive money, it should be on the debit side in the bank account. So I'll write here 4022 as cash or whatever it is because it's a receipt. So I'll write here in that way. Now the next thing is payments 4819. They have given a lot of payment. Either you can write receipt or cash. It doesn't matter. And then I'm going to write make payments. So I'll write payments. It's on the credit side of the cash on the bank account. So I'll write payments. I'll say why did I leave one space when I'm doing the sum on the credit side? 4890. So I'll record 4890. Easy as that. Then we move on to the next part of the sum. It says that checks bank later dishonored. If you receive a check, it should be on the debit side. If it is dishonored, it should be on the opposite side, which is the credit side. So dishonored checks will come on the opposite. So I'll write dishonored 256. Okay. Now let's move on to the next part of the sum. They're also saying that on 30th September, the balance in the bank column of Tamir's cash book was 1,265 overdrawn. So they are saying that on the month end that you had a OD balance, overdraft balance, which means your balance should start from on the beginning of the month. It should be on the credit balance. Here they are saying what was the credit balance on the bank column on the cash book on 1st September. So to find out the credit brought forward balance, I kept this space here. So that's the reason, guys. I found out that they're given carried down balance on the debit side because they're saying there's a OD. So OD means you will have brought forward on the credit side. So overdraft balance they are given is 1,265. So I'll record 1,265 here. Now I can find out the brought forward balance. What is the brought forward balance? Okay. So brought forward balance, how do I find it out, guys? It's very easy. I will put I will draw here the total column, so it's easy for me to find the balance. Now I can find my total here on the debit side. You can see it's 5,287. So I'll write the same value because I know that this side is not going to be greater because we need to find the balance. This is 5,075. So I'll write here 5,075, and here we are getting a balance of 287. So I'll record 5,287. Then we have the next part. Now 4,819 plus 256 is 5,075. I'll write the first balance 5,287 and deduct here. Listen to this very carefully. I'm taking 5,287 and deducting 5,075 to find the balance. So I got 212. So this is the actual balance which the business has on the credit side, on the debit side, on the month. On the credit side on the month beginning. You can see here it's 212. So answer is going to be A. It's that straightforward, guys. When you don't understand a question, take down those notes in a paper. Like I always do this calculation. You can see whenever I explain you, I have a rough sheet here. You can see here. I have a rough sheet here. So what I do is I explain. I just do some sort of calculation in this so to understand when I'm doing a paper. It's not going to be accurate. Even I don't write the values. You can see here. I don't write any values. I just write the figures what I know and give the answer as quick as possible. If you're not good in understanding, then go one by one. Do with practice with the ledgers. We will move on to the sixth part. On 30th September 2018, Ahmed's bank statement showed a credit balance of $2,500. Ahmed found that a check issued for $90 and a deposit of $500 had not been included in the bank statement. What was the balance at bank shown in Ahmed's cash book on 30th September 2018? Very straightforward. They are giving a bank reconciliation sum on a question number 6, and it is adjusted cash book or adjusted bank account. That's what they are requesting you to do it. Now you need to understand one particular thing, that they are saying that the bank statement and the adjusted cash book had a balance difference. So you need to find out that difference on the month end. Because they said that the bank statement is wrong, so you should find out it's correct or wrong. So now here you need to understand one particular thing. If you have bank statement credit balance 2,500, then in the adjusted cash book it should be debit balance 2,500, because we compare the adjusted cash book with the bank statement. So whenever your adjusted cash book has a debit balance, the bank statement has a credit balance. That is the rule you would have learned in bank reconciliation statement. So with that knowledge, we are going to start the adjusted bank account. I'm going to prepare question number 6. I'm going to prepare another bank account. Now this is an adjusted bank account which I'm going to do. I'll erase this off. So now they have said they have a balance on brought forward on the bank statement credit side 2,500. So on adjusted bank account it should be 2,500 on the debit side. And then there's something which they have forgot to adjust. One is Ahmed found a check issued 90. So issued check should come on the credit side of the bank account. So I'll write here 90, or you'll write issued. Okay. So you don't want to do this working and show. You can just find out the answer. A deposit of 500 had not been included in the bank statement. So deposit is here 500. So I'll write here deposit. So I can take the total. The debit side is greater, so I'll write here 3,000. On the credit side 3000, and when I deduct 3000 minus 90, because I take this value and deduct this value from this 3000, so I will get a value of how much, guys? I'm going to get a value of 200910 is my carried down balance of my adjusted bank account or adjusted cash book as they have given. So banks, what was the balance on bank shown in Ahmed's cash book on 30th September? The answer is 2910. I hope you guys understood the sixth one. So let's move on to the next part of the question. Yes. On 1st September 2018, Chan owed Tan 570. During September 2018, the following transaction took place. Tan sold goods 382 credit to Chan. Chan returned goods 150 to Tan. Chan paid Tan 500 by check. As I always say, who is issuing to whom is what you need to know. What was the balance brought down on Chan's account in Tan's ledger? So now Tan is the main person. So you are Tan. Whenever I say like that, you should understand. You should take that particular person as you. So I am Tan. Okay, so I'm not Aslam, I'm Tan. So I am Tan. Now what happened to Chan's account is what I need to see. On 1st September 2018, Chan owed to Tan. So if I am Tan, if you are Tan, then Chan is going to be a credit customer because he is owing. He needs to give us money. And also we have sold goods to him. Tan sold goods to 380 on credit. So he is my credit customer. Chan is my credit customer. So understanding that ideology, I'm going to do the seventh part. I will take another account here. Seven. Yeah, I'm going to copy this ledger account so it's easy for me to do. Always have a ledger account, guys, when you're doing this working in a rough sheet. You don't want to do this type of things. As I'm explaining, I want to show you how I get these answers one by one. If you don't, you will not understand. Then you will stress me. This particular person is doing a class at free cost, but still he's not teaching it properly. So then we move on to the next point. Chan owed Tan 570. So in my books of account, Chan, I need to prepare Chan's account. So he has given me some values. So Chan has given me how much, guys? 570 brought forward. So I'll record here 540 brought forward. Easy as that. After recording 570 brought forward, what I'm going to do is I'm going to see Tan sold goods 380. So I sold goods to them. So in my credit customers account, I made a sale. So I'll write here 380 sales. Sales account credit, Chan account debit, the double entry. Then we move on to the next part of the sum. We got Chan returned goods to 150 to Tan. So when Chan is returning the goods to 150 to Tan, he is going to get something. It's what we say return inward. So we are getting it inside our business. So we will record it as 150. Then we move on to the next part of the sum. What do we have? We have Chan returned goods to Tan. Chan paid 500 by check. So he also making a payment 500 by check. So I'll write it as bank. Now what is the carried down balance? What Chan needs to give us on the month end is what they are asking. So how much is the carried down balance they are given? What was the balance brought down on Chan's account Tan's ledger on 1st October 2018? So they are asking the beginning of the month, not the end of the month. Okay, so the beginning of the month, is it credit or debit? That's what we need to see. Now here, I'm going to find the total first of all. So the carried down balance is going to be 570 plus 380 is going to be 950. You can see here 950. So I'll record 950 on the debit and the credit side. And then I can see that the credit side is 150 plus 500 is 650. So I'll take 950 minus 650, 650. I got carried down balance of 300. But now this is on the month end. So on the beginning of the month is the next month, which is October. As they're given on the sum, you can see here on the sum they are very peculiar. They are saying that on 1st September 2018 the sum started, and they're asking 1st October. They didn't ask 31st September. They didn't ask 30th September. They asked only the October 1st. So the next month beginning. So I'll write here the beginning of the month, which is brought forward of the next month. It's going to be 300. So the answer is going to be, guys, on the debit side, the answer should be 300. So that easy is that this is 1st October and this is 1st September. If you have a confusion on understanding, sorry. Okay, so that easy is that to understand the value. So we have done the 7th one, and the answer is going to be 300 debit. Start doing the 8th sum. Lisa is a credit customer of Daniel. Her account in Daniel's ledger showed the following entries. Now you need to understand one particular thing when you're doing this type of sum. Lisa is a credit customer of Daniel. Now, what are they asking? Are they asking from Lisa's account side or Daniel account side? That's what you need to understand when you're doing this type of sum. Now, when you are seeing here, they have given the debit and the credit balances and some balances. It's like almost a statement of account where you can find out the debit and credit and find out for which account it falls the balance. Here you can see on 10th August, Lisa returned goods list price 140, subject to a 20% trade discount. What was the debit balance on Lisa account after these transactions? They're asking in Lisa account what happened. So you need to understand who is Daniel. First of all, Daniel is a credit customer, so this is a debtors account which they have given here. So now we need to find out what is the actual final balance of this transaction, like after giving the trade discount, after the goods has been returned, what's the amount the statement will be showing under the account of Lisa. So I will be taking the same statement in my Excel sheet. You can see here, which I have already taken. So first August balance, I took 10 credit as per the format they have given on the question. And then they have given sales 300. I have take it on debit side. And they're saying that there is a return. The return is 140 and subject to a 20% trade discount. So I'm going to take the 140 here, but I'm going to show you how I got this 20% discount. So 20% a discount of 140 is going to be 28, right? So I'm going to take this return. So in 140, I'll show you 28 is the amount of discount they have got. So what's the actual value, the list price? When you are returning the goods, you need to find always the list price. So 140 minus 28 will give you 112. So when a credit customer is returning, it's not the debit transaction. The credit customer is returning, it's a return inward. So the credit customer's account, which is the debtor's account, will become credit. So right here 112. So now the actual total here, 10 is credit, minus 300 will give you a value of 290 CR because it's debit balance. So I mean DR, debit balance. And then in 290, you are going to deduct 112. So what's the value you will be getting in debit side? So 290 minus 112 will give you a value of 178. So the answer for the question number 8 is going to be C. So C is the answer because we got 178. I hope you guys understood how we got this type of answer. Moving on to the ninth question of the sum, it says that Seema's financial year ends on 30th September. She rents premises at a monthly rent of $2,000. During the year ended 30th September 2018, she paid $26,000 as rent. Which journal entry will Seema make on 30th September 2018 to transfer the rent to the income statement? It's a very easy and straightforward question. You need to know the actual amount you pay for 12 months when you are doing the income statement transactions, and here they are saying Shima is paying $2,000 every month. So if you are going to take for 12 months, because you are sending for income statement, 2,000 into 12 is going to be 24,000. So this is the amount you are going to send for income statement, and rent is an expense. When you send for income statement, it should be on the debit side. So if rent is debit side, you can see here 24,000 income statement debit side. The answer is a very straightforward one. The reason we didn't take 26,000, then you can ask, sir, why didn't you exclude that 2,000? Because 26,000 is the amount they pay, but you're only taking 24,000. We should always remember to consider the number of months they are paying. So 2,000 into 12 months. So you should take only that 12 particular months because it is sent to the income statement. And then on the rent account, it will become credit because you need to credit the rent account. Rent account is an expense account. So if I draw here and show you, rent account will have a balance of 26. Okay. So in that you will credit 24 and send it to income statement, and that 2,000 is the prepaid payment you have made. So that 2,000 will come in here as carried down. That's how this sum is made actually. So this 24 will go to the from rent account, credit rent account, and debit the income statement. That's what you need to know. Then moving on to the 10th question, it's a very straightforward one. So we found A as the answer on 9th one. Bashir maintains a provision for doubtful debts of 3% of the trade receivable at end of the year. On 31st August, trade receivables amounted to 70,000, and 31st August 2018, trade receivables amounted to 73,000. Should Bashir make on 31st August 2018? So I'm going to take here on the Excel sheet how to do this. You can see here. So I'm going to do the 10th adjustment here. So here they're actually taking two type of balances. One is the opening provision for doubtful debt. Other one is the closing provision for doubtful debt. So in 2017 and 2018, what is my provision for doubtful debt? That's easy for us to calculate. First, we need to take the total amount. They said 70,000. 70,000 into 3%. So I'm going to take 70,000 into 3% in 2017 as the opening balance of 2018. I mean 2017 September 1st. So, and then end of 2018, 73,000 into 3%. So I'm going to take 70,000 into 3% to find my opening balance. 3%. Okay, so how do I calculate? I can show you the calculation here. 70,000 into 3 over 100 will give me a value of 2,100. I got 73,000 and I should take provision for doubtful debt 3%. So 73,000 into 3% will give me a value of 2,190. Now actually I should have charged 2,100, but my business have charged 2,190, which means I have expected 2,100 as bad debts, but I mean provision for doubtful debts, but I have incurred 2,190, which means now you would have learned in control accounts, you would have learned in when you are calculating this type of provisions, that there are two type of provisions. One is under provision, over provision. If your last year provision is greater than this year provision, then it is a over provision. Here last year provision is lower, you can see it's lower than this year's provision, so which means it is an under provision. So I will consider 2,100 minus 2,190, then you have a minus 90 balance. This is under provision. So under provision should be entered. Sorry, I didn't write the formula here properly. So under provision should be taken under income statement as an expense. Over provision should be added as an other income. So as it is an under provision, where this year's provision is greater than the last year's provision. So I can write here a small, this year provision is greater than last year provision. Then we can consider it as under provision. You can also write it as a note when you are doing this. And last year provision is greater than this year provision. Then we say it as over provision. So under provision means considered as an expense. So I'll write here a note, considered as an expense. And over provision means considered as another income. As it is an under provision in this sum, we should consider it as a income statement, debit balance. So here you can see here, provision for doubtful debt account, it should be 90, and income statement credit. So it's wrong actually. Income statement should be debit, because income statement is getting debited because it's an expense, and expense should be debited, not credited. So the answer is going to be provision for doubtful debt account credit and income statement debit. So I hope you guys understood this. Let's move on to the next part. Yeah, so let's move on to the 11th part of this question. Yeah, so I'll erase this off. Leroy has an engineering business. On 31st May, he received an invoice from AB Machine showing the following: cost of replacement parts for machine, cost of repairs to machine, cost of machine, cost of installation of machine. Which costs are capital expenditure in Leroy's books? As you all know, there are two types of expenditures in books of accounting. One is we said as revenue expenditure, other one we said as capital expenditure. Revenue expenditure is a type of expenditure which happens day-to-day expense of a business. A capital expenditure is only incurred when you are replacing the non-current asset, or purchasing a non-current asset, or selling a non-current asset. Selling a non-current asset happens on capital, revenue, capital income. So I'm not speaking about capital income, I'm speaking about capital expenditure. So when you replace a machine, non-current asset, or when you are making an entire big change on the non-current asset, we say it as capital expenditure. So here, cost of replacement parts for machine is a revenue expenditure, because you are replacing certain parts, but still you are not replacing the machine or the entire stuff. Cost of repairs to machine is also some sort of repairs. It can be a maintenance, so it comes under day-to-day expense, so it's a revenue expenditure. Cost of machine, you are actually replacing the entire machine, so it is considered as a revenue expenditure. Cost of installation of machine is also like when you are installing, you have a setup cost. The setup cost also falls under revenue expenditure. So the answer is going to be directly not machine only, not replacement parts machine, not replacement parts repairs installation. It's going to be machine and installation. So it's A. Then we'll move on to the 12th MCQ. So the 12th MCQ is speaking about depreciation. Why is depreciation charged on a non-current asset? To accumulate a fund of money to replace the asset, to charge the cost of using asset against income, to determine the market value of the asset, to ensure that profits are not understated. It's a very straightforward question. They're asking, why do you charge depreciation on an non-current asset? It's not about to replace an asset. Its main thing is to understand how much is the income and from income you need to set off your depreciation every year. So answer is going to be B1. It's a very straightforward one, you guys can understand. To determine the market value of the asset, we never calculate depreciation, or to ensure profits are not understated, we don't calculate depreciation. So our main target of depreciation is to take the expense of that particular asset and charge against the income on every year. Then we move on to the 13th MCQ. Sally bought an uncurrent asset. It was to be used for 10 years, after which it would have no scrap value. You know what's scrap value? Or scrap value is also known as residual value. By end of the time of the asset, you can sell for a certain value. For example, if you purchase 1 million worth of car, when you're selling it at the last moment, maybe you use for 5 to 10 years. After using for 10 years, you can sell still at a cost of 100,000 or something. The metal part's final value. Sally used the straight line method of depreciation. Which statements are correct? Accumulated depreciation after 5 years, annual depreciation charge. Normally, when it comes to straight line method of depreciation, the depreciation doesn't change. It is going to be the same amount, which means the depreciation charge which you are going to charge is going to be always constant. So either here you can see equally half of the cost decrease each year. So it can't be decreased each year. As I said, it is constant. I'm not going to take either A or either C because it is saying decrease each year. So now it should be either B or D because it says was constant. But now the question is, how do we find the correct answer? Because it's a straight line method. Let me read it again. It was to be used for 10 years, after which it would have no scrap value. Shall we use this straight line method of depreciation? Then the answer for B, they have given equal half of cost, was more than half of cost. Simple in understanding, if you use for 5 years out of 10 years, then of course you have used half of the cost, right? That's what it is meaning. So it can't be was more than half of cost because you are using 5 years out of 10 years, you are using 5 years, so half. So in 10, if you take 5, 5 is half 5 divided by, or 10 divided by 5 is 2. So in 2, one portion you are using, so it is going to be half. So the answer is going to be B because you used 5 years, so it's half of the cost. 10 years cost you have deducted 5 years, so of course you have a half, and it is constant because it's a straight line method. So with that understanding, we'll move on to the 14th MCQ. You can see here certain MCQs are very straightforward and easy to calculate, so don't spend much time on this type of calculation. If it is a very hard one, I might take a lot of time to explain you all. A draft income statement showed a gross profit of $12,200. It was later found that carriage on purchase $260 and carriage on sales $230 had both been included as expense in the profit and loss section of the income statement. What was the corrected gross profit? A very tricky one. Let's use our knowledge and think a bit. Here you can understand it's a very straightforward one. They're asking what happens to the gross profit. Here what you need to understand is don't take both of them because carriage on sales is not related to gross profit. So we will be excluding this 230 because it's not a part of, we never learned something called carriage on sale. Carriage on purchase is there, we have learned, and the cost of sales, when we are calculating cost of sales, we take opening stock plus purchase plus carriage inwards. So carriage inward is a part of carriage on purchases. So when you are taking cost of sales, you will be adding carriage on purchases to the cost of sales. You all remember. So this 260, when you add it to the cost of sales, and finally when you take cost of sales, you will deduct it from the sales. That's how you get the gross profit. As they have already taken the gross profit directly, we can exclude this 260 from this 12,200. So when I take 12,200 and exclude this 260, because this is something which comes under cost of sales and we can't deduct cost of sales already, we have already calculated. So I will take this 260 and deduct it straightforwardly from the gross profit. So when I deduct it, I'm getting a value of 11,940. So the reason I didn't take carriage on sales, we haven't learned something. So the examiner is confusing you to find out the gross profit. So don't get confused when you're having carriage on sale. Carriage on purchase they are given, so that's related to gross profit because sales minus cost of sales will get you gross profit. For example, if I put in this way, you might have an understanding. Sales, I don't know what's the value it is, so I'll put some few excess, and cost of sales, I know there is something which we can deduct, which is 260. The 260 should be a deduction to get the gross profit, but then gross profit they already has given GP as 12,200. So as they have already given 12,200, I will bring this 260 to down and deduct from the 12,200 to get the final balance the actual balance of trust profit, then only I will be getting 11,940. So then we'll move on. So the answer is going to be B. So the 15th MCQ, a very straightforward one, but a bit confusing one. Raj is both a customer and a supplier to Balbir. Raj's account in Balbir's ledger showed a debit balance of $300. There was a credit balance of $100 on Raj's account in the purchase ledger. A contra entry between the two accounts was agreed. Which entry would Balbir make in Raj's account in the purchase ledger? A very straightforward one, guys. But here you need to be very, very understanding the question. They're asking what is the amount you're going to deduct in the purchase ledger of Raj account. So now, as Raj is a customer and a supplier, I'm going to take these balances in two sides. You can see here. So I'm drawing here as debtors balances. You can see. So debtors balance as Raj, I'm taking 300 because they are given 300 on the sum, and then they are also saying that he had a credit balance of 100 on Raj's account. So as purchase ledger. So as purchase ledger, I'm taking 100 on the credit side. Now the question is very tricky one. They're asking you which entry would Balbir make in Raj's account in the purchase ledger, not in the debtors ledger. They're asking what is the amount you will be deducting to set off in the purchase ledger. So this is the purchase ledger. Creditors account is known as the purchase ledger. So in purchase ledger, if I'm going to set off the balance, I will be setting off here 100, saying set off. Okay. And on the credit side of debtors, I will be set off. So 100 and 100. Now the question is in which side they have set off the balance. It is debit side of creditors account Raj, which is purchase ledger. So the answer is 100 on the debit side. So I'll take answer C, debit $100. So it's not that a confusing one, but what students think is okay, they are asking set off and they go easily for the answer. They take this 300 and deduct the 100 setting off and taking it as 200. Actually that is wrong. So when they didn't ask what is the amount will be balanced in the debtors account. They ask what is the balance will be available in the purchase ledger. I mean, what is the amount you are going to deduct on the debit side, on which side you are going to deduct, and what is the amount they're asking. So which entry would Balbir make in Raj's account in purchase ledger? So this is the entry which they are expecting, which is set off on the debit side, which you are doing. So that's a very straightforward one, but a bit confusing. Don't get confused when you're doing a sum like this. So we'll move on to the next 16th MCQ. Michael's financial year ends on 31st August. On 30th August 2018, he purchased a motor vehicle using a bank loan which is repayable on 30th August 2020. So this bank loan is more than 1 year, so it should be a non-current liability most probably. On 31st August 2018, Michael had a bank order. It should be a current liability because bank order is almost like within 1 year, you should be able to pay. In which sections of Michael's statement of financial position on 31st August 2018 did these items appear? It's a very easy one. He bought a motor vehicle using a bank loan. So motor vehicle falls under non-current asset. So either C or D should come under as an answer. So now I know it should be it's not A, it's not B. So always go with these options when you're doing this type of MCQs. Then it says that in which sections of Michael's statement of financial position on 31st August 2018 did these terms appear? So motor vehicle comes under non-current asset. Then we have the bank loan. It is falling under non-current liability. So we got the answer. It should be D. And bank overdraft is a very straightforward one. It's a current liability. So let me erase this off and move on to the next part of the sum. 17th MCQ, which may be included in an income and expenditure account. You know, an income and expenditure account is calculated under not-for-profit organization calculations. When you're doing income and expenditure account, it's almost like income statement, And they're asking which may be included in an income and expenditure account. Bad debts, opening balance on the bank account, purchase of equipment, subscription received for the following financial year. Understand one thing, it is, as I said, it is almost like income statement. You can exclude certain things from this. I will not be 17th B part. The reason opening balance on the bank account is the bank's balance starting. So it is almost like a cash book. So receipts and payment. When you are talking about not-for-profit organization, we don't say cash book. We say it as receipts and payment. So receipts and payment is not there. So I will not take B as an answer. Then purchase of equipment is a non-current asset transaction. Again, it comes under receipt and payment. Subscription received for the following financial year is a prepaid receipt, and prepaid receipt comes under, you will receive it under receipts and payment, not under the income and expenditure, because prepayments we should exclude it. The answer is going to be bad debts. It's a very straightforward one, and then we'll move on to the next part of the question. 18th. I'm going to erase this off. Yeah. A club's financial year ends on 31st July. During the year ended 31st July 2018, the following subscriptions were received. So, on beginning of the year in 2017, you received a balance of $50 and subscription for the year ended 31st July. So, for the 2018 year, you got 3,400. The subscription for the year ended 31st July is 20. So, what type of these balance they are meaning? How much would be included in receipts and payment account for the year ended 31st July 2018? So now this 2017 balance is an accrued balance which you need to receive and you will receive for the next year. I mean, in 2018 you should receive this balance, and then this 20 is the upcoming year, which is the prepayment. So do we take this prepayment and do we take this 50 is what you need to understand. Of course 3,400 is going to be under the balance, but how do you find this 50 or 20 is a part of the sum? And the tricky part of this question is they didn't ask income and expenditure, they asked receipts and payments. So when I speak about receipts and payment, you should take the entire thing what you receive is what is the easiest way to find out what is the amount the business has received for the entire year. So when I take entire amount 50 plus 3,400 plus 20 will give me a value of 3,470. The reason why I didn't take 3,450 excluding 20, because you could have asked 3,400 plus 50 is accrued balance. We could have taken 3,450 rather than 3,470, and 20 is a prepayment. Remember guys, prepayment and accruals is only considered when you're doing income and expenditure, not receipt and payment. So they're asking a receipt and payment transaction. So for receipt and payment transaction, you should take the entire amount what you are receiving on the sum. Then we'll move on to the answer is D. So we'll move on to the 19th part of the sum. What do we have? A trader does not keep full accounting records. How can credit purchase for his first year of trading can be calculated? So he doesn't have any accounting records. Now, how do you take credit purchases on the first year when you are calculating the transactions? Checks paid plus discount received plus amount owing to suppliers at the year end. Checks paid plus discount received minus amounts owing to suppliers at year end. Checks paid minus discount received, amount owing to suppliers at the year end. Checks paid minus discount received minus amount owing to suppliers at the end. A very straightforward one. If when you're doing a sum like that, you need to remember one particular thing: the control accounts of creditors. So now if you take creditors control account, you have a format. This control accounts entire description is given under this video, so you can click it and watch the control accounts and learn the entire thing, how control accounts actually works. Now before we move on to that, you need to understand checks paid comes on the debit side of the creditors control account. So discount received also comes on the debit side of the control account. So either answer should be, because it's an addition, these both are in one side, so it's addition, it's correct. So if you deduct, it's wrong, because discount received also comes on the debit side, checks paid is also coming under the debit side. Then the plus mark, which is amount owing to at the suppliers at the year end, is it going to be a plus or a minus? If you take amount owing to suppliers at the year end, we won't take it because it's the next. I mean, if it comes as a minus, the carried down balance should come on the credit side. It doesn't happen. Checks paid, discount received, amounts owing to suppliers at year end all comes under the same format, which is on the debit side. The answer is going to be A. So if you do not know the format, click the description below. You will have the video of control account of purchase and sales. Then you can understand how to do that account, and knowing the format is very important to do this type of sums. We'll move on to the next part of the sum. Well, so let's move on to the 20th MCQ. Let's move on to the 20th MCQ. A trader provided the following information. They are given revenue 100,000, cost of sales 60,000, gross profit 40,000, profit for the year 20,000. And they're asking you to calculate what was the markup. Remember one particular thing, guys. There are two things: markup and margin. Margin is calculated on revenue. Markup is calculated on cost of sales. Now here they have given the gross profit, so we can easily find out the markup. We'll take the gross profit 40,000 and divide it by the cost of sales 60,000, where you will get a value of 0.66. So, and it will be like this. So when you multiply it by 100, you will get 66.67. So when you are rounding it off, it should be 7, because 666 it goes in that way. So answer is going to be D. I'm going to write here D. So 20th is D. Then we move on to the 21st MCQ. Let's move on, guys. Which statement about ordinary shares are correct? You need to understand what is an ordinary share. Ordinary share is a type of share which is given to the owners of the company. Whenever a person is investing in an ordinary share, he is known as the owner, and the shareholder has the right to earn a loss as well as a profit. And when the company is earning a lot, the owner will be getting a lot, and when the company is not performing better, the owner bears the losses. If a company is wound up, ordinary shares are repaid after debentures. Ordinary shares are non-current liability of the company. The holders of ordinary shares are owners of the company. As I already said, the answer number 3 is correct because the holders of ordinary shares are the owners of the company. So this is correct. But then the second thing, there's a problem. So I will be finding out the correct answer. First of all, 3 is the answer. So either it should be this one or this one. So 1 and 2 and 3 is going to be excluded because we know 3 is the correct answer. Ordinary share are a non-current liability. No, it's a capital, so you can't say it as a non-current liability. So second is wrong. If a company is wound up, ordinary shares are repaid after debentures. Now you need to think a bit. Of course, you need to understand when you are making, when you have taken some sort of loans. First of all, you need to pay the loans. Then only you can pay the shareholders because they are owners of the company. Even if you are doing a business, either it can be a small, short-term or sole proprietorship business or partnership. First, you will try to pay the loans what you have taken. So then the answer 1 and 3 becomes the main pitch of the sum. So answer A is the answer of 21 MCQ. Let's move on to the next part. Let's move on to the 22nd MCQ. I'm going to raise this off. Again, another question related to that. Which items are included in equity section of the statement of financial position of a limited company? You need to know limited companies. It's not that hard, guys. You need to know what comes under the financial position under equity section. So here they have given current liabilities. So under current, we won't take current liabilities under equity section. So the first part will be removed because they say ordinary shares comes under that, return earnings comes under that, debentures are excluded. So I will not take because the debentures is a part of non-current liability. Ordinary shares and retained earnings are a part of that. Debentures no. So ordinary shares and retained earnings only. So answer C on the 22nd MCQ. We'll move on to the 23rd then. It's a very straightforward one, 22nd. 23rd. During the financial year, a manufacturing company's payment included the following: purchase of a new machine, running cost of the machine. Where would these appear in the financial statement prepared at the end of the financial year? So when you purchase a new machine, where do we put? Do we put it under manufacturing account? Never. Whenever we purchase a new machine, we put it under statement of financial position. So it doesn't come under A or B, so it should be either C or D. Then the second thing, running cost of machines is the maintenance cost. Do we put it under income statement or manufacturing account? Now this is where you should be able to understand. When you take manufacturing account, income statement is known as the office expenses. Manufacturing accounts becomes the the business main expenses. So when you are taking income statement office expenses, you can't take it under this type of running cost of the machine because machines cost should be taken in under manufacturing account. So the answer is going to be D under 23rd MCQ. It's a very straightforward one, guys, to understand. So we'll move on to the next part, 24. Which group contains only indirect costs? Carriage inwards, factory rent, wages of factory supervisors, carriage inwards, raw material, wages of machine operators, depreciation of machinery, factory rent, wages of factory supervisors, depreciation of machinery, raw material, wages of machine operators. One thing you need to understand from this part, you need to know the direct cost and the indirect cost first of all when you're doing this type of sum. So here, carriage inwards, factory rent, wages of factory supervisor. Carriage inward is a direct cost. Factory rent is an indirect cost. Wages of factory supervisor is indirect. So here there are two indirect and one direct. So I will not take A. So it's wrong. B, carriage inward is a direct and raw material is a direct and wages of machine operators is direct. So I will not take B. So it's wrong. Depreciation of machine is an indirect. Factory rent is an indirect expense. Wages of factory supervisors. Factory supervisors are not dealing with the machine, so this is indirect. Answer is C. And here also you can see raw material is a direct expense, so we will not take D also as an answer. Depreciation of machinery is an indirect one. Wages of machine operators is a direct one. So here you get direct and indirect. So answer is going to be C because all three are indirect. Depreciation of machinery is indirect. Factory rent is indirect and wages of factory supervisors also indirect. Then with that, we are moving on to the next 25th sum. A factory employee records his time of arrival and departure each day. Which document is used for recording his hours of work? A. Clock card. B. Payroll register. C. Timesheet. D. Wages sheet. It's a very straightforward one. It's a very straightforward one. Whenever you are coming inside the, I mean, getting into the business and going out of the business, you always record it in a system called clock card. It's not the payroll register, timesheet, or wages sheet. So it's a very straightforward one. We'll move on to the 26th MCQ then. What do we have on 26th? Which items are statutory deductions for from an employee's gross pay? Now this 25, 26 you can exclude because this is not much testable in your syllabus. They have removed employees payments, so you don't want to worry about it. Even if you get wrong when you're doing this paper, doesn't matter. On your upcoming papers on 7707 you will never find a question like this, but still I explain. They're saying what is a statutory deduction from an employee's gross pay. So what is the government actual deduction from the gross pay, from the entire earnings the employee is earning? So here they have given donation to charity and club subscriptions, donation to charity and social security contribution, income tax and club subscription, income tax and social security contribution. It's a very straightforward one. When you provide a charity, it becomes your personal expense. It can't be the government expense. So club subscription is also your personal expense. So I will exclude A. Then B, social security contribution is a government tax. But then donation to charity is your own personal thing, so I will exclude this. Income tax is a government thing, but then club subscription is not, it's a personal pay. And then final answer is D. That's the correct answer, because you pay income tax on behalf of the earnings you have made. And social security contribution, whenever you are making a security contribution, social security payments, you need to consider it as a gross pay deduction from the statutory. Then we move on to the 27th MCQ. The trader provided the following information. They have given revenue 95,000, purchase 40,000, opening inventory 20,000, and then they have given closing inventory 18,000, cost of sales 42,000. What was the rate of turnover of inventory? Now you need to use the formula. Okay, so we can calculate the formula. You all know how do we take the rate of inventory turnover? Cost of sales divided by average inventory. So they have given the average. You need to find the average inventory. So how do you find the average inventory? Average inventory. You can take the opening inventory, which is 20,000, then closing inventory 18,000, both divided by 2. So 20,000 plus 18,000 is 38,000, divided by 2 will give you a value of 19,000. Now cost of sales is 42,000, so I'll take 42,000 and divide by 19,000, so I'll get a value of 2.21 times. So answer is going to be B. Okay, guys. Okay, ratios video is also on this description. So if you do not know how to do ratios, click the description and watch the videos as well. Let's move on to the next part, 28th part of the sum. Yeah. A business provided the following information about its percentage to gross profit to sales. First year 40%, second year 38%, third year 35%, which means the profit is decreasing year by year. Maybe they are not doing proper sales. What could explain the changes in the percentage of gross profit to sales? Cost of sales is decreasing. No, cost of sales is decreasing means the gross profit will increase. So answer A is completely wrong. Then expenses are decreasing. If your expenses are decreasing, it will not affect the gross profit because that is down below the gross profit. So answer B is also wrong. Quantity of goods sold is decreasing. If you sell less, then of course your profit will go down. So this can be somewhat a considerable one. So I'll keep here. Selling price is decreasing. So either C or D. Now with a confusing, it's the number of goods you sell and it's about the selling price you charge. What will you go ahead? As you know exactly how much you are selling, which quantity, so it's better always to go with the selling price, because sales is determined with the selling price, not the quantities what they sell. So according to accounts, don't go with the quantity, go with the selling price they charge. So selling price is decreasing means the sales might go down. The sales might go down, gross profit will go down surely. So with that ideology, we are moving on to the 29th MCQ. A business value its inventory at the lower of cost and NRV. Which accounting principle is being applied? Accounting entity, dual aspect, money measurement, and prudence. What might be the answer? One you need to understand, accounting entity is where the business and the owner is different. So it's not speaking about the owner and the business. Dual aspect is the double entry. It is not speaking about the double entry. Money measurement is something which you can recognize by money. Of course, lower of cost and NRV can be measured by money, so you can't take it under money measurement as well. Prudence is where you are doing lower of cost and NRV to understate the overstate the profit and understate the expenses. So if you have happening in anything like that, you need to go with prudence. So the concept is applying the prudence concept D. What is the purpose of international accounting standards? To allow users to rely on the information in financial systems being error-free, to enable accountants to get work easily anywhere in the world, to enable non-accountants to understand all information in financial statement, to make it easier to compare financial statements prepared in different countries. The basic financial, international accounting standards basic concept is not to rely on, it cannot be error free. There can be some mistakes, and not all the people in the world can understand, because the international accounting standards is applicable in anywhere in the world, but still not all the accountants. That's not their main scope of making them understand. So, and then non-accountants, people who are not accountants, also be able to understand somewhat okay, but then the main part is to compare financial statement prepared in different countries. That's the reason international accounting standards is applied in almost all the countries. That's the actual reason they are taking to make it easier to compare financial statement prepared in different countries. I hope you have watched the entire video. In the link description, I have uploaded the past papers which I have done. So please watch all those past papers, which will be helpful for you. If you really love this video and love learning with me, with a lot of dedication and commitment, I'm putting these videos with my tight schedules. But then if you really like the way I'm explaining, and if you really learn something out of it, please do not forget to subscribe to the channel, and also please share to all your friends, all your known contacts. This is a channel which is most probably focused on the students who are trying to get good marks in exams within a short span of time. These videos can help you to achieve a lot more in future. We'll come with new more videos. Comment under the comment section what videos you wanted in future. Let me upload those things to make you guys more satisfied in the upcoming sessions. Thank you. Have a nice day. Bye.